Let's focus on the stock that's on our radar. Prime focus, in fact, is the stock. Stock is up close to around 30% in the last 3 months. I think in the last one and a half year, the stock has doubled as well. We have with us Mr. Vikas Rathee, the Group CFO of the company, who joins us from the sidelines of the Valorum a Week Analyst Conference. Hi, Vikas. Thanks so much for joining in. This year you've done close to around 1,500 crores for the first 9 months of the fiscal. If you could tell us what kind of numbers are we working with for FY18, because some of those acquisitions, etc., will start playing in. What kind of numbers are we working with on the top line in terms of margins as well as profitability?
Sure, Nigel. Thanks for having me. We, I think, gave guidance a year ago in terms of what we expect to do for fiscal 17. We said we're going to do north of 2,000 crores and EBITDA margins north of 20%. I think we're already well on track for that, and I think we should exceed that. I think what you should expect for fiscal 18 would be another year of good growth on the revenue side. I think we should expect another 10 to 15% revenue growth, and EBITDA for this year compared to last year would have grown 50%. I won't tell you that we will grow 50% again on the EBITDA side. We hope to be able to get there, but I think you should expect EBITDA to grow by north of 25 to 30% for next year.
Okay, so FY18 revenue growth 10 to 15%. With EBITDA going up by 25 to 30%. So that's the outlook looking for FY18. Because one concern that the market has with Prime Focus is the debt on the company's books, close to about 1,500 crore rupees. Also, the promoter holding is pledged to a great extent. If you could tell us what is the plan of action with regards to that?
See, I think there are two components of debt. I think I should mention that that we actually moved to the Ind AS accounting practice over the last quarter. So obviously anything which is not sweat equity becomes debt, and I think there's a contribution of that. We have been selling non-core assets during the course of this year as well. So you should expect my March debt numbers to be lower than this, and as we produce more EBITDA, a big chunk of that's going to go towards debt reduction. So the target we have for by the end of this calendar year, we need to be able to bring the debt down below 1,000 crores, which I think is achievable. On the promoter pledge side, almost all of the pledges the promoter has is to our lenders to the company. So secured lenders, I think in the process of releasing those pledges, you would have seen pledge percentages come down progressively, every quarter. By the time we have our conference call, for the end of the fiscal year, I think the pledge percentage should have gone down even more significantly. We're in the process of consolidating our debt with one lender in India, and along with that, all the pledges are going to go away.
All right, Vikas, the numbers that we have currently is your total debt is around 1,500 crores and your cash is around 200 crores. So that would make it a net debt of around 1,300 crores. So from 1,300 crores, you're saying it's going to come down to sub 1,000 crores in the coming fiscal. Am I getting those numbers right?
That's right. That's the target.
All right. Also, the other question that I have is Reliance Cap. They have been talking about exiting various non-core investments, etc. We have Reliance MediaWorks that holds close to around 35% stake in the company. Has there any communication that whether there is any kind of change in terms of their plans of being a promoter in the company? And also there are various market rumors. Just want to clear the air. Is Prime Focus on the block? Are they looking for a sellout?
First of all, I think they are not a promoter in the company. They're obviously a key stakeholder in the company, and they've been extremely supportive and helped facilitate the growth of the company, especially in the international markets as well as domestic markets. I think we are a good investment for them. They are a good solid financial partner for the company. I have no news, and I would not expect them to be selling this investment anytime soon.
And the company is not on the block?
Not at all. The company's not on the block. Company's on the an opportunity to actually grow. This would be a bad time for us to ever do that.
All right.
Could you tell us some details about the non-core assets which could yield the company close to about 300 crore rupees, which will go in reducing your debt?
No, I think, Rima, you got it wrong. I think, non-core assets is something we keep looking at, at different points in time. We had shares in Digital Domain, which we liquidated for $30 million. We already got about, close to 200 crores on that. There's a $20 million transaction that's still left over on that part of it, which hopefully we will consummate over the next 6 months. That's just one part of what we expect to do. Given the enhanced EBITDA and cash flows coming through the business, I think you should expect a reduction happening from operating cash flow as well.
All right, Vikas, always a pleasure talking to you.